Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel. So let's get started. So gold is still under the selling pressure, and if you have watched my previous video, then you know that we talked about two minor support levels on the chart. After 1890, we talked about 1884 and we talked about 1878. So when market came down to the level of 1884, we saw some sort of bounce. But as I have already mentioned that this was a minor support, so market could not go for trend reversal, and then market started falling again and market came down to our second minor support of 1878, and right now you can see that market is struggling near the level of 1878. So if you have a buy position right now, my dear friend, you should make an exit after 30-40 pips around 1880 1881. Or if you have a heart of tiger, if you are daredevil kind of a trader, you can wait for the next candle as well. Why I'm saying to exit right now after 30-40 pips? Because my dear friends, keep in mind, this is a seller's market, and as we all know, the most important rule of the market is follow the trend. What is the trend here? The trend is very much towards the downside. Try to understand one thing very well. Taking a buy position in this falling market is going against the trend. When this strong support level like 1890 fail, when strong support like 1890 fail, we cannot expect much from the minor support zone of 1878 until and unless we get any news in the market that will drive the direction of the market in the opposite direction. As long as any fundamental factor comes out and reverses the trend of the market, the trend of the market will be towards the downside only, and we must be very careful. So today's market have two possibilities, or I think that we have two possibilities for the day. First of all, taking a buy position in this level of 1878 is very risky. Okay, 1878 is very risky. If you already have taken a buy position, again I'm saying that try to exit after 30-40 pips or by the next candle, because the trend of the market is still very much towards the downside. And considering the present trend of the market, there is a high possibility of market breaking the support and market going down. This is our first possibility for the day. If I take you to the higher time frame, then you can see that if market breaks the level of 1878 or 1877 level, then we do not have any support on the market. We do not have any support zone on the market. Then market will straight come down to the support zone here around, let me tell you the figure here. The next support zone for market will be around 1844 to 1840. So if market breaks the level of 1878 level and starts falling, if you see that there's a heavy selling in the market is obviously there's a high chance also considering the present downtrend. If market breaks it with big red candles, then there will be a huge fall in the market, and the next big support for market is available at 1844 to 1840. So you can take a sell position and you can be on the trade as well. But again, risk management is extremely important, because this is your hard-earned money and it's your responsibility to protect it. So with proper risk management, you can take a sell position if market breaks the level of 1878 level. Okay, and on the other hand, if market tries to go up from here, or if we see some sort of recovery from the present position, then we have the next selling zone. We have next selling zone around this level, around 1891 to 1895 level. Why this level is important as a selling zone? Because you can see that the blue line, the 50 moving average on a 1 hour time frame is acting as the dynamic resistance of the market. So as this is a dynamic resistance, so we do not have any exact value here. If possible, use 150 moving average, and if market starts going up, then you can wait for the market to reverse from the 50 moving average. So when market will be around this level, around 1891 to 1895 level, observe the market first. There is a high chance, considering the dynamic resistance, there is a high chance that around this level market will face some selling pressure. If you see market forming selling pressure from above, if you see shooting star kind of a pattern or any good price rejection from above, it will give you the confirmation that yes, sellers are present. The 50 moving average is seriously acting as a dynamic resistance, and you can take a sell position. So as of now, I'm just giving you two trading opportunities. Okay, the first trading opportunity is, if market breaks the level and starts going down, with proper risk management, you can take a sell position. Okay, but yes, risk management is extremely important, because any trade setup may fail. My analysis can be wrong as well, but it's your money, it's your hard-earned money, so it's your responsibility to protect it. Secondly, if market goes up and reverses from the 50 moving average, which is also acting as the dynamic resistance of the market, then we can expect some selling again. This is our second trading opportunity. Okay, again I'm saying confirmation, wait for the confirmation. If you find market reversing, then only take a sell position, because after all, no support, no resistance, no level is permanent in the market. So confirmation is always important, and risk management is considered as the supreme, because risk management will only save your hard-earned money, your capital. So whatever you do not gamble with your money. Be a trader, not a gambler. So this is it. Hopefully you understood. Bye bye, take care. See you tomorrow.